The Dow had been trading in a sideways wedge formation or a resistance level for the past 3 months. Last couple of months, it's been caught in this slow trend channel, but also keep hitting this resistance level. But today's trading indicated that this resistance level was not acting as a resistance anymore, and this was based upon a little slow curve trading pattern that told us that they weren't going to close below the T-line. This allowed us to make immediate decisions that if we were right at the breakout level with a slow curve, that if they opened up positive today, more than likely they were going to break out into new territory. This made for very easy executions of long trades. This is not rocket science. This is just doing or using the information that the Japanese race traders have illustrated for the last 400 years as being what normal human nature does. We're just graphically depicting it with charts that tell us when it's time to buy and when it's time to sell. The Nasdaq, which had been the weakest of all the indexes recently, had a left-right combo on Friday. This is usually a very strong reversal signal, and the fact that they gapped it up above the T-line and closed above this downtrending channel was a pretty good indication that the rest of the buying and the rest of the indexes were being confirmed that they were buying across the board. This allowed for immediate participation in trade setups where we can see where the base was setting up in Kendi, K-N-D-I, cradle pattern, a stutter step, and then today there was a doji followed by a gap up, which is your best friend pattern, which usually means there's going to be a very strong price move. So this allowed for a very simple trade strategy. Doji, gap up, market showing strength, and possibly breaking out into new territory. You don't have to see full confirmation. You can be buying immediately. And do you always get a big price move like this on a trade? Not necessarily. But once again, the nice thing about candlestick analysis is that it puts you in situations where you are in situations where you can participate in big price moves. Our recommendation on CPE was also based upon that if they open this market or the stock price positive after a gap up shooting star doji type day off the 50-day or off the T-line and the 20-day moving average, that if they opened it positive, you had basically a flutter kicker signal set up, which is a very strong bullish signal. Additionally, tells us there's probably going to be more upside after this. So once again, candlestick analysis allows for the direction of the trend to be analyzed very easily, and then taking that information and getting into positions that have high profit potential. That'll be it. We'll see you in the chat rooms.